Google should be the last company in the world to run short on AI compute. It has its own cloud, its own data centers, and most importantly, its own custom AI chips, TPUs. And yet, in 2026, Sundar Pichai told investors something strange. Google Cloud revenue would have been even higher if the company had more compute to serve demand. That raises the obvious question. If Google has its own chips, its own cloud, and more than a decade of TPU experience, how is it still compute constrained? The answer is that Google's AI advantage has become oversubscribed. Gemini needs TPUs, Search needs TPUs, Google Cloud customers need TPUs, DeepMind researchers need TPUs, and now outside AI labs want them too, including Anthropic, which has committed to using up to 1 million Google TPUs. In other words, Google did not just escape the compute crunch, it internalized it. The chip built to protect Google from the AI supply shortage has become a bottleneck inside Google itself. So, who gets the TPUs? Let's unpack this. To understand Google's compute crunch, start with what TPUs were built for. Most AI companies have to buy NVIDIA GPUs, rent cloud capacity, or beg hyperscalers for access. Google spent more than a decade building its own alternative. The TPU, Tensor Processing Unit, was designed specifically for AI workloads. It gave Google control over performance, cost, and supply. If NVIDIA GPUs became the default currency of the AI boom, Google had been minting its own currency for years. At first, that was mostly an internal advantage. TPUs powered Google's machine learning systems, reduced dependence on outside chip suppliers, and helped Google run AI at massive scale. But the AI boom changed the value of that asset. As NVIDIA GPUs became scarce and expensive, companies began looking for alternatives. TPUs, already proven inside Google, suddenly became much more attractive outside Google. Anthropic has committed to up to 1 million Google TPUs. Meta has reportedly explored them as an alternative to NVIDIA GPUs. Google has begun selling TPUs directly to some customers beyond its own cloud. So Google did not just build a chip for itself, it built a chip that the rest of the AI industry now wants. And that creates a new question. Is the next TPU more valuable inside Google or outside it? Google Cloud's latest quarterly numbers show why that question is so difficult. Revenue grew 63% to more than $20 billion. The backlog, contracted revenue not yet recognized, surged to more than $460 billion. And even with that growth, Sundar Pichai told investors that revenue would have been even higher if Google had more capacity to serve demand. That is not an abstract constraint. It is a line of customers waiting for chips that do not yet exist. This is why Pichai describes compute allocation as one of his most direct management responsibilities. He said he spends a dedicated hour each week reviewing compute at the project and team level, looking at which teams are consuming which compute units. The CEO is not just managing people, products, and budgets. He's managing TPUs. Imagine being Sundar Pichai for that hour. Gemini wants compute because model quality is the foundation for everything Google does in AI. Search wants compute because AI answers will defend Google's core business. Google Cloud wants compute because customers are waiting, and the backlog is already above $460 billion. DeepMind wants compute because long-term research is how Google got here in the first place. Anthropic wants compute because it can commit to up to 1 million TPUs. Every one of those claims is rational. There is no neutral formula for deciding which block of compute should protect the future, serve the present, or generate revenue today. In old Google, strategy was about which teams had the most talent and executive support. In AI Google, strategy is about who gets the chips. And when the same chip can power research or generate revenue, every allocation decision is a business decision. By the way, if you want to follow the economics of the AI build-out, from Google TPUs to NVIDIA GPUs to cloud margins and infrastructure financing, that is what we cover every week in our newsletter, ARPU. If you want to get this kind of analysis in your inbox, the link is at the top of the description. Once you understand the internal fight for TPUs, the Blackstone deal makes sense. Google's problem is not just how to allocate today's compute, it's how to create more of it fast enough to satisfy all the demand for its chips. It's an infrastructure financing problem. Data centers require land, power, networking, cooling, and enormous upfront capital. Google can fund a lot of that itself, but if TPU demand is coming from Gemini, Search, DeepMind, and customers all at once, then scaling TPUs requires outside capital. That's where Blackstone comes in. In May 2026, Google and Blackstone announced a joint venture to create a new AI cloud built around Google's TPUs. Blackstone is committing $5 billion in initial equity, with plans to bring 500 megawatts of capacity online in 2027. Including leverage, the total investment could reach $25 billion. The obvious question is, why create a separate company when Google already has Google Cloud? Because this is not just cloud expansion. It's Google turning TPUs from internal infrastructure into a financial asset. The structure helps Google do two things at once: scale TPU access and avoid funding incremental data center entirely through Google's own CapEx. This is the strategic shift. TPUs began as internal Google infrastructure. Then they became a Google Cloud product. Now they're becoming the basis of a standalone AI compute business. Compute allocation doesn't only show up in revenue, backlog, and cloud capacity, it also changes the internal incentives of the company. When compute is abundant, researchers can pursue more speculative ideas. When compute is scarce, every project has to justify why it deserves access to the machines. That's a subtler consequence of the TPU shortage. It doesn't just decide which products get built, it can decide which research questions survive. For years, Google DeepMind was one of the dream environments for researchers. Elite colleagues, enormous infrastructure, the freedom to pursue ambitious long-term ideas. That culture helped produce some of the most important breakthroughs in AI. But compute shortage changes the terms of that bargain. If a research project uses thousands of TPUs, that's no longer just an internal science expense. It's compute that could have gone to Gemini, Search, cloud customers, or an outside AI lab willing to pay for capacity. That means research has to compete against revenue. Bloomberg reported that compute access inside Google has become more constrained, shaping which projects researchers pursue, which leaders they align with, and how quickly work moves. A major training run in 2024 reportedly paused some research projects for months. That's a real cultural shift. And that's the context for the recent wave of researcher departures. Andrew Dye left after nearly 14 years at Google to found Elorian, focused on visual reasoning. David Silver, the star researcher behind AlphaGo and AlphaZero, left in December 2025 to found Ineffable Intelligence, which has since raised more than $1 billion in seed funding. The point is not that startups have more compute than Google. They don't. The point is control. Google used to be the place researchers went to get access to more compute. Now, some may leave because they want control over the compute they can get and over the research agenda that compute makes possible. So where does that leave us? Google built TPUs to reduce its reliance on NVIDIA, and it worked, almost too well. TPUs are no longer just Google's internal advantage. They're now a bottleneck of their own. That's the lesson of the AI boom. Vertical integration does not eliminate scarcity. It moves the scarcity inside the company. Google has the chips. It just doesn't have enough chips for every version of its future. And the next question is what this does to the economics of the AI build-out. Who earns the margin, who carries the capex, and who gets rationed when compute runs short? That is what we break down every week in our newsletter, ARPU. Subscribe at the link in the description. Thanks for watching.